Good morning. I wanted to just take a moment and record this video because there's so much misinformation and so much people's opinions going on about the real estate market, about the mortgage market, about housing and the bubble that they think is coming. So I find it really interesting, and there was a couple posts I've been tagged on, addressing the fact that there's so many people that have these strong opinions that aren't experts in the industry, that haven't been in the industry and don't really know the historical data and can't put into perspective what has and is currently going on. Just like, if you're having massive migraines on and on and on, and you find out that you have a tumor in your brain, you're not going to go to the plumber down the street or, the guy that works at Best Buy to get medical advice. You're going to go to a neurosurgeon. So instead of listening to reporters or listening to your friend's uncle's sister's brother's cousin niece's nephew who once bought a house, let's look at data, let's look at facts, let's look at things that actually tell a true story. So myself, I started in the mortgage industry back in 2003, so let's put some historical context into that. One, there was a subprime mortgage industry that no longer exists. In 2003, when I was 22 years old, and I started doing mortgages, and it was like, hey, if you have a 580 credit score, you can get 100% financing. Tell me how much money you make. I don't even have to verify it. And you're going to get 100% financing? Not a good idea. Also, considering the fact that back then, nearly every mortgage was an adjustable rate mortgage. Back in the 2000s, during the subprime era, over 80% of all subprime mortgages were adjustable rate mortgages that don't have the caps the way that they do now. I haven't done an adjustable rate mortgage myself for anyone that I've ever worked with since probably 2007. So, big difference. But let's dig into the actual data. In 2003, there were 6.1 million homes sold in the United States of America at an average interest rate of 5.83%. In 2004, there were 6.6 million homes sold at an average interest rate of 5.84%. In 2005, there were 7 million homes sold at 5.87% average interest rates. 2006 saw a little bit of a drop to 6.1 million homes sold and an average interest rate of 6.41%. And then in 2007, it dropped to 5.6 million with an average interest rate of 6.34%. Then in 2008, the bubble burst, the market imploded. There were still 4.1 million homes sold at an average interest rate of 6.03%. So that's pretty staggering, right? In 2019, there was $2.7 trillion worth of mortgages originated in total. In 2020, as we saw interest rates drop, that number ballooned to 4.1 trillion. And last year, we saw 2.7 trillion in refinances alone. So what this means is that over $8 trillion worth of mortgages are at the lowest rates that we've seen, ever. So 3% range or even in the twos. So looking at the data from 2021, last year when we saw this massive increase in values of home, there were a total of 6 million homes sold. So that 6 million number would have been kind of in the middle of the 2000s when the population was, of course, less. But the big difference was, unlike in any other time in the 2000s, the average interest rate in 2021 of the 6 million homes that was sold was 2.96%. 2.96%. That is more than half of the 6.3, 6.41, 6.03, and nearly half of the lowest of any of the rates of the 2000s, which was a 5.83. Now, so far in 2022, most experts expect there to be 5.6 million homes sold this year. And right now, the average interest rate for someone that's purchased a home so far this year is 4.09%. So February 7th, at that point in time, across the board, mortgage lenders were under 4% on their interest rates. And it wasn't until April when, on average, mortgage lenders were into the fives. Now, I've locked a couple in recently that are still in the fours, but I am a mortgage broker and have a lot more options than, your retail lenders that have 2021. So there's a little bit different. So right now, the estimate for 2022 is estimating 466,000 homes to be sold each month. So doing really kind of some simple math, knowing that most mortgage companies take typically 45 to 60 days, especially if we're talking about banks, to close mortgages. But even looking at 30, we're sitting here looking at the fact that through the end of March, pretty much everybody should have been in the fours or lower. So what that means is that for those 4 months, 1.8 million of those homes, of that 5.6 that's expected to sell this year, those homeowners are still going to be under 5%. So, a lot of people now are going to, of course, be in the 5% range. We really aren't sure where rates are going to continue to go. We are definitely seeing a slowdown in the number of homes listed and the number of homes that are sold. Because again, why would you want to list your house and sell it in a market where interest rates are as high as they are when they're coming off all-time lows? So, the market is slowing down. So when people talk about a bubble, in 2008, there were over 3 million foreclosures. Okay, over 3 million. The numbers for 2021, which, were greatly impacted by the CARES Act and COVID, wasn't even 100,000. So massively different numbers. So far this year, the projection for this year is less than 250,000 homes will start some type of foreclosure proceedings. We are at the lowest rates in the history of mortgage servicing with defaults. So unlike the subprime days where we had interest rates in the 6% range, where there were adjustable rates to people that were unqualified, that's not how it is today. So back in the 2000s, over 24% of home purchasers had below a 620 credit score. Since then, that number's hovered around 1%. So there's a big difference. So let's just take a look at people in the past, 12 months that have purchased homes, and there might be the fear of, hey, they don't have equity in their home. Maybe the values drop a little bit, theoretically. Well, the thing about that is that they have a 2.96% interest rate on average. So even if the value of their home was to drop 5%, the mortgage payment that they have is so much lower than someone that would buy their house for 5% less with current interest rates. At some point in time, don't take offense to this, man, we got to have a little bit of common sense and a little logic in here. So I understand that, there's a lot of people in America that are frustrated with how expensive it is to rent a home, are frustrated with how expensive it is to purchase a home. And, in your situation, that's true and that's applicable. And I feel for you in that, but that's your situation. And because your situation is what your situation is, that doesn't mean it applies to other people. You take someone that makes $24,000 a year, and a $150,000 house is incredibly expensive for them. You take someone that makes $150,000 a year, and a $150,000 house is nothing to them. So it's all about perspective. And there's too many times where people that want to go and scream from the rooftops and the mountaintops take their situation, their financial situation, what their economy is like to them, and they blanket statement apply that to other people when they have no facts, they've done no homework, and they don't know what they're talking about. Now, there are some reports that have came out about listings lowering their prices. Imagine that. People are greedy. Some of the times when I get a contract in and I pick up the phone after I've looked at comps for the home, and I call the listing agent and say, hey, just wondering, where did you get the value for this? And when you ran your comps, what did you get as the value? And they're like, oh, well, I got X. Well, hey, we're under contract for 40 grand more than X. So don't be surprised when the appraisal comes in short. So what you're seeing now, you're not seeing, oh, it's a bubble, it's bursting. You're seeing people that are listing houses at unreasonable prices that aren't supported in the market, that are far above any comps, okay? And so when you list a house more than anyone's willing to pay for it, what are you going to do? You're going to lower the price. But in general, it's still incredibly competitive. If you're talking about homes under $350,000 in especially the Northeast Florida market, every single one of them, if it's halfway decent, there's so much competition. I hear it every single day. I talk to pre-approved home buyers and real estate agents every single day, losing out on contracts for houses when there's multiple offers in that price point. Obviously, when we start talking about $500,000 homes, $750,000 homes, $1 million homes, yeah, there's a lot less people that can afford to buy those homes. So there's a lot less competition, and those historically have sat on the market for a lot longer. But it doesn't change the statistics, it doesn't change the numbers, and it doesn't change the fact there's no bubble coming. So if you're thinking that, oh no, there's going to be all these foreclosures, man, you're living in fairy tale land. So the people that in theory could be a little bit upside down in their homes would be people that have bought in the last 6 to 12 months, in theory. However, they have the lowest interest rates ever. Okay, ever. Those are the people that have sub 3% interest rates. When you look at the difference in payment, why would they ever sell? And they're qualified. This wasn't like people that told me they made 90 grand when they worked at McDonald's. These are people where we verified everything. We verified every deposit into their account. We verified their paycheck stubs, their W-2s. If they were using overtime, commission, or bonuses, we had a 2-year history that we averaged out. These are people that were the best of the best that had money to cover short appraisals. And most of these were conventional buyers, which is the most difficult loan to qualify for. So I know that there's a lot of you out there that are very frustrated with the market. I know that there's a lot of you that are tired of losing out. I know that there's a lot of you that don't like how much rent is, and you're just hoping and you're praying that there's going to be a bubble and that we're going to see the 2000s again, and that you're going to be able to scoop up a foreclosure for half of the value. But it's not going to happen. So I hope that instead of forming an opinion on your feelings and your situation, that instead you actually do some research, talk to experts. The internet's a great place. There's a lot of statistics and data that's recorded out there. So instead of reading a puff article piece that's trying to get clicks, do a little homework, find out the truth, because what's real and what's fake is a big difference. Hope this has been educational for you. Hope this has kind of cleared things up a little bit. I'm always available for a conversation. This is something I'm very passionate about and love talking about. So feel free to reach out. I hope you have an amazing day. Thank you.